So, raising capital is sort of the backbone for almost all companies in this sector, the life science sector. It's a common denominator, and it's an ever-present, problem, if you put it that way. And you guys are all experts in helping these companies achieve what they need in terms of attracting capital. So obviously it's very interesting to hear what you have to say of today's investor climate as to helping life science companies raise the capital they need. First of all, though, I would like to have you all have a 30-second introduction of yourself and tell us what you do and a little bit about the company you work for. We can start right here. Benjamin.
Thank you. Thanks for inviting me, by the way. My name is Benjamin Nordin. I'm co-heading the healthcare corporate finance business at ABG Sundal Collier. ABG is a Norwegian investment bank with the head office, of course, in Oslo then, but a big office in Stockholm as well. We're roughly 250 employees in Stockholm. We're about 100 people working. We have various sectors we're focusing on. Healthcare is one important one. That's a short intro.
Great, thank you.
My name is Jonas Ljungström, and I am the managing partner of Naventus Corporate Finance. We are a fairly young company. We are 10 employees, and one of our focus areas are life science, but also in renewables and technology.
So my name is Kristofer Krolak. I'm a partner at Vator Securities. We're also a fairly young company, founded in 2010. We specialize in financing within growth companies, especially life sciences. We do private placements, IPOs, directed share issues, rights issues. So far we have listed around 10 companies on Nasdaq First North and on the main markets.
Yeah, my name is Stefan Lundberg, and I work at Erik Penser Bank. We're a fairly old company then, I would say. Founded by Erik Penser, who has his roots here in this area actually. And as a bank, we are divided into two business areas actually. We have wealth management, where we take care of other people's money. And then we have corporate finance, where we raise capital for mainly small cap companies. We are we are one of the leading partners in that segment, small caps, and we work with mainly tech and life science companies. And I've been in this industry for nearly 20 years now. So I've been around for both ups and downs, and I think we are somewhere in a perfect storm here actually, but we can talk more about that later on.
Let's start off right there, because as you said, you have quite a few years in the business, and it would be nice to hear your perspective on almost, if you say, the recent years, how the market has changed with several new companies coming into the market.
Yeah, I mean, if you look at Nasdaq First North, for example, we are over 300 listed companies there now. We have delegations coming from all over the world, actually, visiting Sweden to hear about the story about the First North growth market success story. And I mean, the real heroes is in my view, the retail investors. We have a really broad retail investor following here in Sweden, which are really unique actually, and since a couple of 6 or 7 years, there's been a lot of individuals and family offices and old entrepreneurs investing in this segment, both the tech but also in the life science and in the medtech sector. And the last 2-3 years, we've seen the institutional investor coming down, investing in really small companies with a market cap of 100 or even less than that. So, I mean, from our perspective here, I think life hasn't been easier actually, but you never know.
Things might change.
Yeah, I've been around for quite some time as well. So I started as an equity analyst 20 years ago, and it's interesting to compare the world right now, at least the local world we're living in here in the Nordics, which has changed dramatically. When I started, I think we were, I haven't counted, but I guess we were around 40, 50 analysts covering the sector. And now we're down to a fraction of that, and the number of companies has grown with, I would say, 5 times maybe, which in itself is a problem because you don't have analysts covering the companies that are listed. So that in itself is a challenge for investors. Of course, when they invest, they need someone to hold their hand, and someone to actually who's able to go in depth and understand what the company is doing. So I think that's a big challenge right now. But I agree that it's a good environment for investing in biotech right now.
Yes, and I need to say that I've been actually 25 years as well in the market. And I believe that the life science sector, and I'm a generalist, is a little bit like a wave landscape, meaning that with the environment currently with 0 interest rates, profitable large caps, a lot of wealthy individuals, as we read today in Dagens Industri, $374,000 millionaires. There is capital available, and I believe that very much of our work is actually to find our place somewhere along the line from Professor Borrebäck earlier today with the sort of founding companies together with the health cap, Björn Olander, up to the Matthias Häggblom's larger caps. So we need to find our space. Our space is like raising 50 to 200 million SEK and sort of assessing where it's a fair bet, and when the market in the wave environment is there, assist the company and try to find the investors among the institutionals or the high net worth individuals.
What's your experience?
And I would like to add that one thing that makes the Swedish market so special and unique is that we have a very diversified pool of investors or capital. We have the high net worth individuals, we have the generalists and the specialists who's investing in smaller companies. So with having a diversified pool of capital makes the investor base very agile and dynamic. So you can always find some source of money these days.
But is that also then a case of seeing that? I remember someone in an earlier panel saying something about volatile capital as well when it comes to the retail base. And would you say that you have seen any fluctuation during the last, say, 4 years from 2015 and onwards, as from your perspective, to how do you feel about actually attracting these investors, the high net individuals and so on? Is it easier now or is it harder?
So I'm the young one in the panel. I don't have 25 years behind me, but I would say that one thing to look out for is if you have a large tail of early investors, retail investors that have come in at a cheap price before the IPO. Once you make the IPO, you need to have a good sense of how your cap table is structured. So if you have a pre-IPO, not long before the IPO, the early investors, they have a tendency to flood the market with cheap shares, taking home profits in the first trading days. So that is one thing to look out for.
So as an investor, you should also be very aware of what's been going on before the IPO.
Exactly, yeah.
And, sorry, go ahead.
That's very much our kind of work. As you said about the cap table, there is often where you have like venture capital investors in the cap table, where you yourself as a financial advisor play a role in actually cleaning up the cap table in the process. So in that context, you have a clean-up situation as well as sort of a lock-up secondary sales issues to take care of.
And I agree, but as an advisor, I think it's really important to know or to assess the investor pool, so to say. See which investor is interested in this asset at this time. Because when you create value in your company and you de-risk your asset, you will attract different investors in different stages. And taking a company from preclinical development into clinic, or pushing a fully developed product into commercial stage, there will be different investors for the different stages. So I think as an advisor, it is really important to establish this, what we call the buyer universe, who will buy this asset at this time, and also with regards to what has happened before in the company in the cap table.
So going then towards market, going from early stage and thinking about going public, from a company perspective, what are the absolute do's and don'ts that you should think of when you're planning or pondering an IPO? What would you say, Benjamin?
I would actually repeat what Matthias Häggblom, I think, said just a couple of hours ago, that under-promise and over-deliver. I think it's in these times it's quite easy to over-promise and to attract the wrong type of investors, and that will eventually down the line be extremely problematic for you as a company when you're trying to create long-term value. If you have something of value in your company, you should definitely build on that, and that in itself will create value for investors long term. So that's the biggest mistake you can do, basically, to attract the wrong type of investors that will only look at when the next data point comes up, or when you're hitting into a delay or something like that. You want shareholders who understands the equity story and can invest also in hard times, in difficult times.
Would you say that there's a knowledge, a lack of knowledge among the retail base of investors as far as these value inflection points and the long haul, to be in it for the long haul? Would you say that there's a need for more education among investors?
Definitely yes. That's where
you come in.
We come in to the picture, and that is not as much as ourselves. It's our sort of experts, and also our job is a lot to assess the management and the board and the scientific board to feel that the investors we are taking in, if they are retail investors, that, as I said before, really have a fair bet, that they are betting on the same premises as these credible people that really believe in it on the same terms. That's, our responsibility.
Yeah, I just want to fill in a bit about what to think about if you're going public. From a advisor perspective, we need time. We need time to learn the company. We need time to understand the business, to understand who is going to invest in it, to understand the current shareholders' view on this company, how long-term are they. So, be out there in good time. 12 months is not that much of a time to prepare for an IPO. And one other thing is that we have done like 10, 12 IPOs the last years, and I think only one of them has been a pure biotech case. One has been a medtech case, but the problem there is we only want to go out with a secured from cornerstones institutional investors IPO. Otherwise, we don't think that we will have a good start of a trading in that share. And the problem is today that it's not that easy to find cornerstones in pure play biotech cases. So it's a little bit of a problem in that case. But
and if I can add one more thing, is we like to see that companies have they raise enough capital so they can fully finance their business plan, so they can execute on a business plan. I am personally not a big fan of the spoon-feeding approach, where companies are being funded with small pools of capital, because I think that makes the companies think short term. And even the thing that a fully financed study or a fully financed commercial launch could be a key factor in a long-term investor's decision to invest or not. So having a fully financed business plan to execute on, I think, is very important.
Know that it was Industrifonden and Sweden Bio, they released a report earlier this year showing that for the last 3 or something years there has actually been an increase in refinancing and smaller amounts at the time. So this should then, according to the theory, be a problem down the line.
Yeah, I think that 2-3 years ago we saw loads of companies coming into First North making smaller IPOs, and these companies need refinancing to execute on their business plan long term. So I think we will see more of that.
But as advisors and helping these companies, I presume it's an easy task to tell the companies that you need to raise more capital. How easy is it to help them execute on that plan? What would you say?
You'd be surprised that, coming back to business plans, I think that's one of the biggest mistakes, I think, companies, if you read basic entrepreneurial literature, the first thing you do is a business plan. And you'd be surprised how many companies don't actually have a good business plan or have a business plan at all. So as an advisor, when as a financial advisor, if you're talking about like an IPO or something, I've been in situations where we've actually needed to rewrite or write the business plan first and then come back in a year or so. And that's very strange, given that that's basically the first thing you should do. So I think I actually forgot the question. What was the question?
No,
this was important to tell you guys.
Yeah. No, now I actually forgot the question as well.
Yeah, okay.
But then I can pick it up.
Thank you.
I would say the special little challenging topic with this sector is the length from the starting point to actually producing the drug and the different phases. So we need to find our space in the phases. If it's 15-20 years from the lab here in the university until the drug, we need to come in somewhere, at least talking for myself and some of you. We come in some sort of phase two, where you have sort of had the angel investors, some VCs, and then where we sort of try to bridge the gap between hopefully finding institutional investors, but they are quite few, so they are a bit picky and difficult. So we need to find the ultra high net worth individuals who believe in the good cause, but in the business thing, and then sort of bridge it to the big pharma. And we are in the space 50 to 200, and Benjamin, you're a bit higher up in the hierarchy maybe, but something like that.
So if the challenge is to go from the early stage financing and before you can or want to attract the bigger fish, so to speak, then it falls down to some of you guys to help the companies out here. And when looking at IPOs, you say if they come to you and they're not really prepared, even with a business plan. So when is a good time to IPO from your perspective? Because we always hear that the Swedish market has quite a few very early stage companies listed. So when is the good time, according to you guys?
When there's an IPO window.
No, but I mean, when you can attract institutional capital, actually, and I think that is somewhere around phase 2, more or less. And also, it should be a focused portfolio, and also, but I mean, otherwise, it's hard to raise really much capital to this kind of companies that are too early stage.
As I said, I pitched on some of the people here in the room. I did the Index Pharma 250 million IPO at First North, which you later on did the directed share issue in. What was very tempting in that case was a fantastic board, scientific board, where you had you were aligned with the owners and the management, having the institutional investors, SEB, Industry Fonden, taking a corner position where you could feel very comfortable then to sell to the, first of all, ultra high net worth individuals, and then tail on the retail investors. That was at least a very nice sort of life science transaction from a fair perspective from my side.
Yeah, go ahead.
Okay, so another thing with being an early stage company, I think a good time to do an IPO is when you have solid news flow coming. So example for phase 2, or you're moving on to another phase. Because when you are an early stage life science company, there are certain times when you don't have anything to communicate. So how do you keep the market updated when you don't have any news to communicate? And that is a big challenge. But for example, yesterday when Biogen announced that they're going with a filing for aducanumab, the BioArctic stock closed up at 45%. So if there's anything happening around the market or your field that could be in your favor, that could drive interest towards your stock, I think you should act on that. So a good time is when you have solid news flow and good traction in the market.
You were going to add something, Benjamin?
Yeah, it's difficult to plan on other companies' deliveries, of course. So I think it's an extremely difficult task, because most of the biotech companies, at least in the Nordics, usually it's one asset, and then you add something just to have a news flow in a way. That's the base case. That's that's a very common situation, and I think it should be possible to IPO those as well. But then you need to prepare and have a much more well thought through PR and IR strategy to be able to talk about other things while nothing is happening in your project. But it's definitely a challenge. But since it's difficult to raise capital without going public these days. So I think us as advisors, if we can bridge that gap and be able to help companies with a firm IR PR strategy as well, not only financial advice, you have the right IR and PR people that actually knows the area as well, that could help. It's not about creating a story that isn't there. It's just about creating a buzz around the company and reminding investors that there's an asset there.
So very true. I would like to say that I think that BioStock has a good meaning to fill there as well. I mean, I would like to go on forever with this discussion because you have lots of interesting information to give us. However, we're going to have to round it up here, and we'll just say that you guys are available to all the companies that are here, so they can come to you and ask those specific questions in the next break. Thank you very much for joining us.
Thank you.
Thank you very much.
Thank you.